In this video traders, we're going to look at what is the magnet theory. Stay tuned. Hey guys, a very warm welcome to you. Thank you for tuning in. All right, so what is the magnet theory? So this is something that I've used for many years. I continue to use it. And I never really thought there was anything to it. I just called it a magnet theory, and I don't even know where it came from, but you'll see in a second why I called it that. But I actually dug around and found out there's studies to confirm that it's actually a theory. I don't think it's called the magnet theory. I think they've probably got some better name for it than that, but I call it the magnet theory, and we'll see why in a second. But often this is the case, before we get into the video guys, often it's the case that when you're putting in the screen time, you start to see stuff that you plan and trade around that then later is proven to be kind of effective, and you go, well actually yeah, I've been doing that because I see that it works. I don't have the evidence. Someone can't say, where's your evidence to? I can say, well, track record, but I can't give you any stats that I've back tested and gone, this is working. So anyway, digressing slightly, let's get around and talk to what it's all about. So the magnet theory is this, guys. Let's talk about what it is and potentially why it works. So magnet theory to me is, when I first started noticing this when I was trading Dow Futures, probably 10 years ago, was it 12? A long time ago, and we would trade them looking for them to push into the whole number. So the 1,000 number used to be a lot more meaningful when it was obviously at a low level, and the 100 number was touched a lot less than it is now when it's a higher price, because obviously percentage move is different. And you do stuff like, and it's the same with crude oil. Crude oil trade is exactly the same way. You know, you'd have price doing something, and it would almost be, imagine that was 100 for whatever we're looking at. It would almost be that if it got close to it, it would nearly always, the price would nearly always tag it, and I called it a price magnet. So price would act like a magnet, drawing it to it. So this became nice to structure your trades around, and still is now to this day. The way I will frame a trade is I will say, okay, well, do I expect the trade to go? Why do I expect it to go there? Is it a whole number? Is it something that's acting like a magnet? Again, this is often, it's a prior high, so it's not necessarily a whole number. It could be a prior high, it could be a really key level. Price will very often get sucked to that if it's gone most of the way. Now, not to say if it's right up there and it's down there, it's just going to go there immediately. But the point is, if we start something and it gets to within striking distance of it a couple of days, very often it seems that price will just go up to it and finish doing its work before doing something else. So the way that you trade that is you say to yourself, all right, I think 100 is a magnet. I think that that's going to suck price to it. If I can get on board a long with another pattern, so we're not just going wildly in, because of course we want to manage the risk. There's no point in just punting away and hoping something's going to hit. We're not going to make any money that way. So as it starts to kind of come, maybe there's a flag, maybe there's a pullback, maybe there's a double bottom on this kind of thing, or whatever it may be. You get the idea, pin bar below some little support here, etc. Whatever. It starts to push up again. Now we've quantified our trade a lot easier. Our target becomes much cleaner and easier, because very often it's quite challenging to pick a target sometimes, and this now becomes an obvious target. We say, okay, well, there's our target. The price is acting like a magnet, sucking it towards the target. So if I frame it as that's my target, all I need to find now is a place where the risk is capped. So something like that, or whatever pattern it may be. And my target is X. Obviously it's going to diminish and decrease as price gets more towards it. So I need to find a decent trade that's got a good risk reward ratio, and if I assume it's got a high probability, I've now got a decent setup to take. And so I can wrap around that and say, well, I assume price is going to get there, that's my target, and looking for a good entry to get in. It makes life a little bit easier, because your bias is obviously in one direction. What you're looking for is a very specific trade, and if it goes too far and it gets too close to that, then you're not going to take it anyway, because there's only a few ticks in it. You're like, oh, well, there's only 20 ticks in it, I've got to risk 40. I'm not going to take it. So it stops you chasing stuff and getting caught out. So it's very powerful, guys. And like I say, a lot of studies have shown that this is true. So I believe that did a study based on a prior big high. So you've got this kind of thing rather than the whole numbers, which is my kind of thing. You've got a high put in here, and let's say, you know, more work's been done over the months and what have you down here, then it starts to push back up. When it gets closer to it, the chance of it hitting it is quite high, as opposed to not hitting at all. Now, does it always do it? No, of course not. That's why we get some lower highs, but what the studies are showing is that we will tag it, perhaps we'll fake out, whatever, but whatever we do afterwards is irrelevant. The point is when we get close enough to it, often it's tagged. So that's with like key levels, whole numbers, especially on crude oil. We're talking about the tens, thousands on the Dows, etc. You get the idea. Hundreds on stocks, you get the idea. So why does this happen? Well, you know what? I'm not entirely sure. There's some theories out there. Some are saying, well, there's option strikes at those levels. It seems sensible. And so some option traders are looking for price to hit that. So maybe they're hedging. Maybe there's other things involved in it that are causing that as a natural kind of pivot area, especially when you've got a lot of options contract trading around a specific level. I mean, that would explain the whole numbers a little bit, because there's a big swathe of people that want the option to expire worthless. And potentially they can say, well, if it costs me X amount to kind of push some supply and demand, that will help my other trade, and I can also hedge on this, and so that makes some sense. The other is that it doesn't obviously explain the prior high. The other is that everyone's looking at it. So a lot of traders might say, okay, well, I fancy this as a short, and the default for many traders is to say, well, let's wait and see what happens when we test that. Let's test that level first and let's see what happens. You know, if we start to fly through, then we can get a better price for it. If we fail, we can still do it, but let's see if it tests that. So very often you get people deferring their sell until it hits that, as you might do with longs as well. Longs might be like, okay, my target's that high, I want to see how it gets that. So the natural supply and demand imbalance is automatically shifted in a small way, but shifted so that this drifts up and finally tags. It's the same with these whole numbers a little bit. Okay, let's see what happens when it hits 100. Or if you can imagine a board meeting with hedging, or not necessarily speculation, but say hedging, and they want to hedge, like, well, we need to hedge at this level, let's hedge at 100, let's start buying at 100, let's start doing this at 100. And so it's a very easy thing to people to start to say, and so the traders are given orders to perhaps execute that, or someone should bring up saying, you know, start selling me crude oil at 100, when it gets to 100 and start selling it. You know, it's an easy thing to say, and so perhaps it's the laziness almost of bigger money that's where supply demand starts to shift, and so it may shift, but it means that it's almost got a natural vacuum sucking it up. So anyway, guys, that's my magnet theory. I don't claim to have some kind of exclusivity on that, but it works well, and there's some studies to back up that there's something else to it other than just observation. If you like this kind of stuff, thumbs up is much appreciated. Take care, guys. Bye-bye.